Good morning, traders and investors. My name is Roger Scott, and I'm the senior strategist for WealthPress. Today's Friday. It's October 28th. It's just 24 hours, or actually like 12 hours before my birthday. My birthday's tomorrow on Saturday. Very excited. I'm going to be 52 years old, and I'm doing a class tomorrow. So if you want to wish me a happy birthday, come live tomorrow. There's a link below. You could sign up right now. Now, folks, it's about 8:04 in the morning. The market's going to open up in about an hour and 26 minutes to be specific with you. And I like to be very specific. As you can see here, the NASDAQ is down 100 points while the Dow is barely moving. Why? Well, I'm glad you asked. Let me explain. We had news on Amazon. Oy, 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 vey. This stock, look at this. The stock is down 15%. It's down all the way down here below its base level. Pretty low right now. And we had news on Apple, which wasn't all that bad, actually. It was actually reasonable. And Apple has a big market cap. But it'll be very, very interesting day today, especially in light of other earnings. The market's got to assess or appraise into its value AbbVie. You've got Aon. You've got Chart Industries, Bloomin' Brands. That's a big one. Colgate Palmolive. I mean, look at this. Exxon, LyondellBasell, NextEra Energy, another big one. So there's a lot of stocks still coming out. And yesterday, I mean, look at this. My God. I mean, Decker, Dexcom, Gaming, Hertz, Honeywell, Intel, anywhere you look. Intel actually came out with some good numbers. Keurig Dr. Pepper didn't, unfortunately. But the bottom line is the earnings are coming out reasonably within expectations. The biggest hurdle right now is the tech sector and the earnings that we're seeing. If you look at the tech sector, it's low, and we're long the tech sector, but I believe it's going to bottom out somewhere right around here and start cooling off, because I think most of the downside is priced in probably near the 120 level. And that goes pretty much the same thing for the QQQ. I don't think there's that much more downside. I think the market's going to start taking on more choppy phase. It's having a very difficult time going below this level, which is very positive. And with the Fed thinking of basically regulating their rates after this next rate hike, which is well priced into the market, we may be going higher, or at least staying at this level. As I mentioned, look at ARK funds, look at the small caps. They're not really going down all that much. They're going choppy, while the bond market is still taking a slower. This divergence between the bond market, see that? It broke all the way down. Stocks didn't. Stocks stayed around here. I mean, the Dow Jones did. It did break a little bit, but for the most part, look at where we're at right now. We're back in that range, and bonds are not. Although I think this is a little too much too fast, and we're going to be backing off these levels in the next couple of days. I think the market's going to take on a slightly bearish interpretation because we are overbought in the short term, because earnings have been a little bit better than expected again. And again, they're not really better than expected. They're simply the expectations were so low. Let's talk about global economy. We've got today personal income, employment cost index, consumer sentiment, and home sales. The personal income is going to be the huge report. That's going to be really big, and that's going to, hopefully the number of unemployment is going down, not up. And consumer sentiment. But honestly, consumer sentiment after all of these earnings, after the GDP, after retail sales, I don't think it's going to have as much of an impact as we expect. But I'm starting to get a little bit bearish on the sentiment. I'm not seeing more upside. We're approaching the 200-day moving average. And as far as stocks, we got 238 stocks making 20-day breakouts and only 25 making 20-day breakdowns. So there's not much assessment yet to the downside, but we may be in a choppy kind of a range-bound market till we see more outside earnings from the NASDAQ giving us better numbers. Now, looking at the market as a whole, let me just give you my pre-morning global analysis and what to expect, and we'll move on to technical levels from there. NASDAQ Composite, S&P Index, they were basically pushed down by technology, healthcare, and consumer services. There was a rally in Caterpillar and Boeing. Industrial stocks, as I mentioned a few days ago, are doing pretty good. But we had a meltdown in Meta, and after the market closed, Amazon. Oof, ouch. Third quarter GDP showed that U.S. economy returned to growth, believe it or not. As indicated that the Federal Reserve interest rate hike hurt consumer spending. Investors continue to scan the economic data for evidence that the aggressive interest rate hikes are going to have a desired effect, and it may be. Remember, all this stuff is fairly delayed. Meanwhile, we still have an 84.4% chance of a 75% rate hike. But now, because for December, we're looking at a 50% chance of a 50-point rate hike. So the number is starting to come down. All eyes today will be on the core PCE. Next, it's coming out real soon. On average, we're expecting the number to grow 0.5 compared to 0.6 reasonably. Pending home sales will be reported today. They're looking at minus 5% compared to previous negative 2% month over month. And then U.S. Michigan consumer sentiment, which is what I just mentioned, will be coming out, and I don't think it's going to have as big of an impact. They're estimating the numbers to come out to 59.8, and the last figure was 59.8. Outside of that, now this is interesting, and I think this is going to have an impact to some travel stocks. And we're short, by the way, Marriott, we're short Six Flags Magic Mountain, we're short travel stocks. Shanghai closed as China introduced a new COVID restrictions to battle a rise in COVID cases. You can't make this up if you tried. The government recently reiterated its commitment to zero COVID policy, brewing fresh concerns over its Chinese economy. So, I mean, it's like they just can't let it go. At the same time, the Nikkei closed lower as the government was preparing for $490 billion, almost $500 billion of infusion. So pre-market moves: Amazon down 13%, Gilead Sciences up over 3%, Amazon up over 5%, and Apple, I don't know where Apple is here, but Apple actually beat expectations. And Apple, last time I checked, had the largest market cap of most companies. Now, want to show you something. The Dow Jones is starting to come up to the 200-day moving average. I actually think we're going to cool off next few days. Put to call ratio is still favoring the calls favoring us moving towards the call side because we're still above 1, which means puts are still well in control of this market, as you could see here. So the market is getting stretched out once again, but we don't know if this is going to be it or if it's going to go up higher, because it could go substantially higher. One of the upsides I'm seeing is the fact that volatility is still not increasing, even though earnings have been bad. But again, the markets appear to be overbought. And if you look at the NASDAQ right now, you will see that the NASDAQ is not having nearly as much fun as the Dow Jones around these levels. The NASDAQ is hurting. It's still around here, while look at the Dow Jones. So what I believe is going to happen is that the NASDAQ is going to push the Dow lower, and we're going to see some downside as a result in the next few days. Also, bonds appear to be fizzling out, and as you guys know, bonds have a big influence on the stock market. So I'm getting slightly neutral to slightly bearish over the near term. I'm not expecting anything crazy to go on. I'm just expecting the market to cool off in the next couple of days. Now, looking at the sectors, and this is something we haven't looked at in quite some time. You've got a lot of stocks now. You've got the consumer discretionary, 48% above 50-day moving average. Consumer staples back 60%. Energy that isn't messing with us. The question is the 200-day moving average going to take on this type of picture with all the greens? Because so far I'm not seeing it. And remember, this is what gives the market stability, not this right here. This is where you get the stability. So the only place I'm really seeing stability developing right now is consumer staples, as I told you it would. Definitely energy. Not seeing any love yet from utilities, but the night is still young. And let's see here. Industrial. I mentioned industrial to you. So industrial, consumer staples, energy, that's where the fun is starting to show up. As you could see here, these stocks are above the 100-day moving average. They're starting to get foundationally strong. The energy, financials, healthcare, and industrial. And I've been telling you to keep your eye on industrial for quite some time. Now, I wanted to talk about something really interesting. I launched an indicator a few days ago. It's still in the launch. And this is a printout from the other day. This is an algo indicator. Now, a lot of people were asking me, Roger, if it's an indicator, how are you using it to back test? Well, I want to explain this to you. This indicator can actually be used as a system. It worked so well as an indicator, picking both low and high levels, entry and exit levels, that we can use it as a standalone system, which is really, really, really cool. So what we do is every day for premium members of the indicator program who wanted to upgrade, we're giving them the last 2 years of trades and how the indicator hit them as a system. So we're showing you which stocks hit the best. So for example, look at Dollar Tree. Yesterday, Dollar Tree showed that it had out of the last 2 years, it had 14 trades. It had 85% plus win rate, and it had a profit factor over 24, right? So if you're figuring out you can scan the indicator and you can get all these, but you won't get the profit factor and the win rate. And what's really, really cool about algos, right, is to know this information as you go into a trade. So don't just use the indicator. Pay the extra $800 if you can and get the scan, because it's kind of fun having the indicator and getting those green lights and the red lights, right? But it's really cool knowing what the historic back test of all those setups is, right? So you can have that as well. And I just wanted to show you the difference. So if I'm looking at all these stocks, I probably wouldn't take NVR that has a profit factor of 1.8. I'd probably look at something higher like EXR. That's for every dollar you risk, what your win rate would be over time. And here's the percentage of profitability, and here's the number of trades taken. So let's say you love the indicator and you want to use it, but you only want to use it on stocks that the indicator really moves well on. Well, this tells you that exactly. So waste management, 17 trades. The indicator had a 76% win rate using just the indicator for the entry and the exit, the green light and the red light. It's very, 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 very cool. So I wanted to show you this and show you how the indicator isn't just an indicator. It's a system. It's an algo system that can give you complete back test if you take us up on it, and can show you exactly the win rate of the indicator that you're using in the future on your favorite stocks. So what will happen over time is you will pick some stocks that you really, really like, and then you'll see which ones the indicator does really well on, and then you can create a hit list based on that. But I think it's very cool. And again, I'm not trying to sell you this. I'm just trying to show you this and explain to you that the indicator, the quantum indicator that we're launching right now, also has this little cool feature that you can purchase and literally create it into a system that'll give you setups on demand anytime with complete win rate and profit factors. And that's an algo feature. Very, 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 very important. For the next couple of days, I'm expecting the market to cool off unless there's some major positive earnings surprises. I'm not expecting a lot of upside, mostly a mixed market action. Now, folks, by the way, I got a lot of emails from folks there who were unable to attend my live quantum indicator demo. So I asked my team to make a replay available today, especially since I covered 5 tickers my indicator spotted. We just talked about them. I also review how I use this indicator to find overbought and oversold stocks. And that's pretty useful in markets which have big, big swings almost daily, like the ones we're in right now. And if you stay till the end, you'll get the steps on how to install it on your own trading platform. Just click the link below, check it out. If you're watching on YouTube, watch it below the video, comment below this video, like these videos, and send me emails, support@marketgeek.com. support@marketgeeks.com. It's my birthday tomorrow. I'll talk to you guys later. Have a great, great weekend, and I hope to see you real soon. Bye.